Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 23rd of January, starting off with the FTSE 100, where we're still trying to rebound from that support resistance test that we had on Thursday around 77.30. Above that, looking for obviously the highs that we had recently, just above 78.80, and the all-time intraday high, I think 79.03. Top of that channel there from the beginning of October up to 8,000 and still hoping for that by the end of next month. RSI in the low 60s, which is a decent staging post for further gains. Obviously, I'd like to see that 77.30 area hold and RSI 50 hold as well. Below 77.30 risks down to the 76.70 area and that broken September resistance line. Hopefully that's the lowest we'd go on any retracement. Going on to the DAX, and here you can see a similar picture to the FTSE, slightly better perhaps. We've got the top of that channel, that falling, well, rising, it's actually a rising wedge, 15,500. That's the target while we hold above the low of Thursday at 14,900. Below that, the risk of 14,700, but hopefully no lower than that. On to the Dow, which has been the laggard in the trio, the leading trio here. Here, though, again, Thursday's low holding around 32,900. Want to see an end-of-day close above the 50-day moving average at 33,500 to get us up to that main resistance line there from last April at 34,300. Star of the show at the moment, which is an unusual thing to say, is Bitcoin. Here we've got the second bull flag, broken out at the first one. Old resistance there around 21,700 from back in November and earlier this month, or in fact just a week or two ago. Above that, looking for a breakout towards the post-August resistance near 25,000. And then the big prize, perhaps by the end of next month, up to 30,000. And the top of that broadening triangle from June. On to the stocks, and quite a few of them. Couldn't really eliminate that many of them. First one is Argo blockchain, where we've got the shares consolidating between what sort of 12 and 16 pence or 17 pence, the initial January resistance. End of day close above 17 could get us up to an unlikely sounding 27 pence as a best case scenario. That's the top of that broadening triangle, and I suppose it is being helped by the recovery in Bitcoin, also being helped by the rising 50-day moving average there. So above 12, still got 17 and 27 on the map there for Argo blockchain. The big change though would come on a break of the 200-day line. That's at 31 pence. We haven't been above that since the end of 2021. And as you may be aware, the boundary between bullish and bearish is either above or below that 200-day line. So at the moment, it's a bear market rally rather than anything else. On to a stock which is not quite so high profile, or energy, but here we've broken out of that triangle, symmetrical, well, the narrowing triangle rather, that we did just around a week ago. We've got a rising 50-day moving average. We've had two unfilled gaps to the upside, in fact three now with today's move. That suggests that we should be able to get up to 22 or 23 pence at the top of that rising trend channel from the beginning of last year, perhaps as soon as the end of next month. Barron Oil, one of the most followed stocks at the moment, so I'm going to look at it again. We were assuming and hoping that the shares would break out of that triangle that we had in place until Friday, which we did. So above 0.14 broke that triangle, then above the 50-day moving average at 0.15. We're looking for 0.25 at the top of that rising trend channel from the end of October. On to the next situation, which I think I got to mention in the papers over the weekend. Here we've got Checkit, which has broken to a new January high above 24 pence, above 24, looking for 32, which is the top of the broadening triangle there from back in August. RSI overbought, but we've got the prize of breaking through the 200-day line at 26 pence ahead of a potential move to 32 pence by the end of next month, only back below recent support at 21 pence, delaying the upside or the recovery scenario. News today from DG Innovate, and we've had a gap to the upside off very oversold levels, which is good news. Want to see the shares stay above 0.11 really, which was support on the way down. Above that, looking for the 50-day moving average at 0.13, and then the ultimate target perhaps by the end of next month as high as 0.16, which would be at least a decent inroad into all the losses that we've had since the spring of last year. So looking for 0.16 while we're above 0.11 on DG. Stock which has been in the wars for quite some time is Finnu, but looks as though the turning point's finally come below 10 pence. Always looked a little bit low there, and we've broken that extended triangle from March last year. An end of day close above the 50-day moving average at 12 pence could take the shares up to 16 pence over the next few weeks. Again, another stock which has been very oversold. RSI was down at 2 out of 100, which is mind-blowing if you're a bull, and obviously rather upsetting as well. On to First Tin, which has been championed here for quite some time. Here we're just breaking out of this very tight bull flag and breaking through the 200-day moving average at 14 3/4. Above that, looking for a resistance line projection from last May, as high as 24 pence. And we could see that by the end of March if everything goes well. Ideally, we stay above the initial January resistance around 12 1/4 pence ahead of 24 pence for First Tin. Next situation is Getech, where we've gapped to the upside and through the 50-day moving average after a bear trap. So it's a bear trap gap reversal above 13 pence, looking for the shares to retest December resistance at 19 pence. Best case scenario over the next 2 to 3 months is for the shares to head up to 26 pence. And that would be at the top of a broadening triangle from back in June. Hemogenyx has turned itself around for the start of 2023 in quite a dramatic way. We'd like to see the shares remain above around 3.1 pence, which was resistance, initial January resistance. We've had we've had at least one major unfilled gap to the upside. I think there was another one earlier on, but even if there wasn't, the unfilled gap to the upside, pretty strong signal, and that suggests that we've got more gas in the tank here. Looking back at the daily chart, you can see that we had old support in 2021 around 5.5 pence, and that's the target while we hold above the 3 pence area, ideally above 3 1/4 over the near term. On to Invinity, which I know has its fans, and here sideways consolidation continuing above the 50-day moving average at 36 pence. We're assuming that we'll head higher. We've got the barrier of the 200-day line at 46 pence, but if we can break that, then it's a retest of December resistance in the low 60s. Nice multiple bounces there for the RSI at or above the neutral RSI 50 level, which can be a decent continuation signal in its own right. Got the return of Mkango, and here the rising trend channel from September looks like it's working. We've had good support there around 12 1/4 pence. Above that, looking for 18 pence at the top of that channel from September, and we could see that perhaps by the end of next month or even sooner. Good to see Phoenix Copper, if I can spit out the words, doing well. It's now trying to break through the 200-day moving average, which hasn't been above since back in April. That's there at 33 pence, and an end of day close above that. We should be looking at 45 pence at that July resistance line projection. Ideally, we stay well above 30 to 31 pence, which was the initial January resistance. We've got a rising 50-day moving average there as well to help us along and provide extra momentum for the shares. On to Rockfire, which has had a couple of decent RNSs in the last couple of sessions, and even better, it's had a couple of unfilled gaps to the upside after that sideways shuffle along a rising 50-day moving average. That kind of setup tends to be pretty strong. Shows that the bulls are there are too many bulls around to get the shares below the 50-day line. So our initial target there hit at 0.2 pence. End of day close above 0.2, and we could be looking to fill the gap there from October up to 0.25 and even hit 0.28 as soon as the end of next month. So a welcome return for the bull argument there at Rockfire, and ideally we stay above the old November resistance at 0.19 in the interim. Just a couple of stocks to go now. First one is Synectics, and here we've had a nice break of that resistance line there from back in the beginning of 2021. That was around £1.29. Above that, we're looking for the shares to flip higher to £1.65 or so at the top of that broadening triangle from way back in the end of 2019, which seems years ago now. And golden cross there as well. So basically the picture here above 130, looking for 160 plus. Maybe some delay around 140 or 150, but the bigger picture here looks as though the breakout is about to be upon us. One of the more difficult situations in the market is vast resources, but does seem to be plugging away at the moment. We broke that line of resistance there from October back at 0.19. We just need to see an end of day close above the 50-day moving average, 0.2 pence plus, to give us a chance of a move to the upper 0.2s. So 0.26, 0.27 within that rising trend channel from back in November. Only well below 0.17, really delaying the recovery argument there. And you can see that the shares have also broken above the neutral RSI 50 level. That's it for me today. More updates tomorrow.